Okay, well, for more on the banks and whether it's a good time to invest, we're joined by Jack Ablin of Harris Private Bank, where he oversees $60 billion, and he is also author of his new book, if you can see it here, Reading Minds and Markets. I'm going to do it over here. And actually, you just got on the Wall Street Journal bestseller list, so congratulations,
I was surprised.
Jack.
A friend of mine emailed me and told me she saw it on there. I've confirmed it myself.
Fantastic.
I'm so delighted.
Well, you'll have to credit us at some point, right?
That's right. Absolutely. Absolutely.
Okay, Jack. So having seen the earnings reports out today, and also really for the rest for this past week, the tone of it, I mean, what is your sense?
Sure. First of all, going into this week, analyst expectations for profits were historically low. I mean, minus 35%. So anyone that couldn't beat that has real issues.
Low expectations.
Low expectations. So I think earnings relative to expectations were pretty much off the table. So where were investors looking, I think, at both revenues, but then also management outlook. And for the most part, I would say, you know, obviously an A for beating estimates, a B.
But that's low-hanging fruit.
Low-hanging fruit.
Yeah.
A B minus for revenues. We're still, you know, expecting slightly lower revenues. And, you know, unfortunately, that's consistent. And then outlooks, I think, are relatively sanguine. So all in all, probably not a surprise that we're up as much as we are this week. Obviously, we've got some, you know, disturbing news with CIT and other issues. But all in all, I think, you know, investors are willing to look forward, as is management, and the picture looks pretty good.
Well, do you think the markets are willing to look beyond the news about CIT? I mean, even if it does file for bankruptcy, that it's pretty much discounted?
I think so. You know, it's funny. I was thinking about it this morning, and I think I have a new definition of systemic risk. Systemic risk is if Goldman Sachs has a position in the security. In this case, Goldman Sachs didn't have a position in CIT, so there was no systemic risk.
Okay, well, Jack, getting back, though, to GE, JP Morgan, also, of course, Goldman, but today Bank of America and Citigroup, all of those, I mean, excluding Goldman, actually, all of those pointing to softer consumer credit, though. I mean, that has got to be the red flag that we take away from these earnings reports.
That's it. And really, I think there are two issues going on. There's the, you know, let's get out of this cyclical recession. And I would agree with most estimates that we will probably print a positive GDP growth in the third quarter. But the fact remains, Betty, that we do have a consumer that's over-levered. We have to repair our collective balance sheets. It took us 10 years to get to where we are right now. It's not going to take us 10 months to get out. So I do think we're going to end up operating somewhat below potential for a little while. But I think we could maybe slug along, you know, at zero or perhaps slightly positive on the economy, but we're not back. We're not off to the races.
No, certainly some optimism, but not a whole lot yet.
Right.
Jack, great to see you finally in person.
Thank you.
And congratulations again on your book and making the bestseller list. Jack Ablin of Harris Private Bank.